So we're going to talk about cash advances today, and so let me just kind of start out by just explaining what the cash advance is and what the other options would be for a business owner to get financing. So in the U.S., most small business owners, they're going to be looking initially to get financing from banks. They are going to look for like traditional financing, they would call it. So, they would go to a bank and they would get a loan from the bank to pay for something their business needs. The problem with that financing is that, first of all, it's very difficult to get approved for it. And so in the U.S., most small business owners don't really have enough credit to get the money from the bank. And if they do have the credit to get the money from the bank, then the bank is going to look at collateral. And one of the big things in small businesses today is that they don't want to have a lot of stuff. They don't want to buy the building. They'd rather rent the building. They don't want to own the inventory. They'd rather have the inventory on credit. So a lot of businesses don't have a lot of assets to put up as collateral. So that makes it difficult to get the money. And the third thing is that even if they have the credit and they have the collateral, a lot of times they're not able to wait to get the money. To get a bank loan is going to take usually anywhere from 3 to 6 months, and it could take longer. And in business, that doesn't really help you very much, because usually when you need money, it's because you need it right away. And so what I'm going to talk to you about here is some of kind of the opportunity and the opportunities that business owners face, which is really the reason why they need the cash advance. And so a cash advance allows a business owner to take advantage of opportunities that come up in their business that they otherwise would not be able to take advantage of. So it's really an exciting thing for a business owner to know that they have that option, that they're able to get money, even though they maybe don't have the greatest credit, they don't have really good collateral, but they really need to get money right away, very quickly, to take advantage of an opportunity. That's what the cash advance really does. And so what a cash advance does is that a cash advance uses one of two things as collateral to get a loan. Most commonly, it's what's called a merchant cash advance, or an MCA. A merchant cash advance basically uses the credit card processing revenue as the collateral. And so the way it works is that, let's say that I'm a business owner and I've got a little shop, and every month, let's say that I take in $10,000 in credit card transactions. So I might sell $20,000 worth of stuff, but $10,000 of it people pay with cash, and the other $10,000 they pay with a card. So a merchant cash advance, we look at that $10,000 that they have that's credit card processing revenue, and we can give them a loan against that money. And I'll talk more about that in a little bit as far as like how much we can give them. But we're going to make a loan to them based on that $10,000 that they have coming in every month in credit card volume. And so basically what a merchant cash advance does is we go to the merchant and say, look, how about we go ahead and advance you, your next couple months worth of credit card processing revenue ahead of time now, and you can pay us back for that advance over a period of time from that credit card processing revenue. And so we don't have to be as concerned about their credit or their collateral, because when they process that $10,000 every month in credit card volume, part of that money is going to go back to pay the loan, and part of the money is going to go to their bank account. So it's kind of a guaranteed, payback. And so that allows us to give them some money even when they normally wouldn't qualify for a traditional loan. Now, that's one way that they can get an advance. The other type of advance that you can pitch is what's called an ACH advance, or an ACH loan. What that does is a little bit different. So some business owners that you're going to deal with, either they don't accept credit card, or their credit card revenue is a very tiny percentage of their overall. So let's say you run into a business owner that does $100,000 a month in total revenue, but only about $5,000 a month is credit card processing. So they're doing $100,000 in total, but only about $5,000 in credit card processing. Well, for a merchant that's only doing $5,000 a month in credit card processing volume, it's going to be difficult to get them any kind of a decent cash advance. So they're not going to be able to get very much money based on that. But instead, if they have a really consistent amount of deposits going into their bank account, then we can do a loan to them of about half of that monthly total revenue. So if we see that in their bank account consistently every month about $100,000 is deposited into their bank account from their business, then we could loan them probably around $40,000, $50,000, maybe $60,000. And then the way to get paid back is every day, on a daily basis, 5 days a week, they're going to have a little bit of money taken out of their account. So it might be, $100 a day is going to be taken out of their bank account until that money is paid back. And that's called an ACH loan. So the important thing to understand is the only thing that a business owner really needs to have in order to get a cash advance is they need to have revenue. And so if that revenue goes directly into their bank account as cash deposits and checks, that's fine. That's an ACH loan. Or it's a little bit easier to get them approved for a cash advance on their credit card volume. So if they process a lot of credit card volume, like 10,000 or more in credit card transactions a month, it's really easy to get them approved there for a merchant cash advance, and we can pay it back through the merchant services. So that's kind of like what a cash advance is. So let me talk to you about why a business owner would want to get a cash advance. And this is really important because this is going to be your whole pitch is really going to be kind of based around this, and you want to get into these conversations with business owners about these opportunities that they are potentially losing out on, that they could be taking advantage of if they had a little bit of extra capital. So a few of the opportunities, the first thing here I have on here is this picture of some business people, because business is very competitive. Okay, so if you're a pizza shop in a local market, then you've got other pizza shops in that same local market, and you are competing against that other pizza shop. And so if you want to get business, you have to take advantage of opportunities, and you have to be competitive. So business owners are looking for opportunities, and they're looking for ways to compete against other competitors. So what can they do about that? Well, the first one would be marketing. Okay, marketing. So I'll give you an example of this. Let's say that I am, again, a pizza shop, and let's say that I want to send out a mailer. I want to send a little brochure of our new menu with a special coupon, and I want to send that to everybody in my market, and that's going to cost me $10,000. But I know that if I do that, I'm probably going to generate $100,000 worth of revenue by spending $10,000 on marketing. I'm going to get all these people to come to my business. That's a great investment. But if I don't have the $10,000 that I need to do the marketing, then I can't get the $100,000 in revenue. So what I'm going to do is I'm going to try to get a merchant cash advance for $10,000 and fund that marketing. And then over the next 6, 8, 9 months, I got to pay back that $10,000. And I might end up paying back a total of $13,000 because of the interest on the loan. But even though I had to pay back $13,000, it was still well worth it because I generated all these new customers and all this new business. So marketing is an area where a business owner can take advantage of that. So if you're talking to a business owner and they're like, well, we don't really need any money right now, we don't need capital, one of the things you could ask them is, you could say, one of the things a lot of our clients do is they use this money for marketing. And so they'll get a cash advance so they can do a new marketing initiative that's going to revitalize their business and get them new customers. Is there any marketing efforts that you wish you could do, but you just don't have the money to do it right now? And that's a really good pitch to have a conversation with them about the marketing. Marketing is very expensive, but if you do it the right way, it can be really profitable and really beneficial. So marketing is one of the opportunities that business owners utilize. Another one that I have here is equipment. Okay? In this case, we have a pizza oven. These ovens like this that bake pizzas, they can cost anywhere from $15,000 to $40,000 for a good oven that cooks pizzas the right way. So these business owners are spending $15,000 to $40,000 for a new oven. But here's the important thing about it. Let's say you have a pizza shop and they have this old junky oven, that doesn't really do things very quickly. They could get a new oven, and that new oven's going to allow them to bake those pizzas maybe twice as fast. They can put twice as many pizzas through that oven. Well, now when they get that big lunch rush, they can fulfill those orders a lot quicker, and they're going to get a lot more business, and so that new oven is really going to be worthwhile to them, okay? In other businesses, there's other equipment that they need. It might be a construction company that needs some equipment. It might be a retail store that needs to get a new point of sale system or a new cash register, a new counter, a big new display case. And so these are like, physical objects that the business needs that cost a lot of money. But here's the interesting thing that happens. I'll give you an example of this, actually, since we're looking at a pizza shop oven. I had one of my clients that has a pizza shop, and his pizza shop actually burned to the ground. He had a fire in there, and it burned down, so he had to start a new pizza shop. And he still had all of his customers. He still had all of his loyalty in the local community as a good shop. But one of the biggest problems he had was he didn't even have an oven because, the place burnt down. And what happened was he knew the insurance company was going to give him like $20,000 for his oven that he lost in the fire, but it was going to take them probably 3 or 4 months to get him the money. And he found a pizza oven that was in really good condition. It was only like $13,000. So it was used. It was a really good deal. But he didn't have $13,000 and the insurance company hadn't given him the money yet. So he came to me and I said, hey, you know what? We can get you a cash advance for $13,000 like tomorrow, and you can go buy that oven. You're going to have to pay back maybe around $15,000, $16,000 over the course of the loan, but that's still a really good deal, because he still got it for a good price, and he was able to open his business up and get going again, and so he did that. I've had other businesses where retail stores really wanted to get a new touchscreen point of sale solution that cost maybe $8,000 or $9,000, and they just didn't have the money for it, and so they were able to get a cash advance. They were able to get that in there, and that really helped their business to grow. So there's all these different physical objects, so you could ask the business owner, is there anything that you need for your store, any equipment that you might need or hardware that you might need that you've been putting off purchasing because you don't have the cash flow for it, where maybe we could give you some capital to help with an expenditure like that, okay? Okay, the next one I have down here is construction, construction or expansion. One of the most common reasons that a business will get a very large cash advance is to open another location. And so you might have let's say you have a hair salon. And you might have a hair salon and they're very successful at their location, but they've kind of maxed out their market. They've done as much as they can do in that city, but they have a really good business model and they know that they could open another hair salon maybe 45 minutes away in another city, and they know it would be very profitable, but they need like $80,000 to buy the store, to get all the equipment they need to set up a new shop, to get the registers and hire the people and have the initial cash flow to get through the first 6 or 8 weeks. They might need $80,000 to do that. And they know it would be profitable. It'd be a great thing to be able to expand and have a new store, but they just don't have the money to do it. They don't have the cash. So you could do a cash advance. They get that $80,000. They go open a new store. They're excited about it, and then they pay that $80,000 back over a period of time. Okay, so construction and expansion. So again, these are just conversation pieces you can have with the business owner, and you can ask them and say, I see you've got a hair salon there. I'm sure you're really successful. Have you ever thought about opening a second location? That's something that we finance all the time, and so that's another area where they are going to probably end up wanting to use some capital. The last one we have down here is inventory. Okay, inventory. So when you're talking about a retail store, especially maybe a medium to larger size retail store, a lot of times they're going to run into big opportunities where they can buy something. Let's say there's a shoe store, okay? And let's say that across town there's another shoe store that's going out of business, okay? What they can actually do is that shoe store might be able to go and buy all the inventory from that other shoe store that's going out of business for 5% of its value or 10% of its value. They can get a great deal, and they know they can resell those shoes and they can make a huge profit. But they need $20,000 or $30,000 to buy all the shoes at that huge discount from the store going out of business. They know they'll be able to sell the shoes over the next few months and make a huge profit. So they could get a cash advance for that $20,000 or $30,000, go buy that inventory at a really good price, and then come back and resell that. So these are just a few examples of the types of opportunities. Now, many times business owners need the money just to cover cash flow. They've got payroll expenses or they've got expenses coming up, and they just are trying to survive, and that's sometimes why they need the cash. But what you'll find is when you're pitching the business owner, it's going to be more positive for you to talk about opportunity than it is to talk about problems. So on the phone, I would highly recommend that you talk about opportunities like marketing, purchasing inventory, expansion, growth for their company, hiring a new person. Talk about opportunities, and that's going to really speak to them, and they're going to like that idea a lot better. Okay? I talk to you about how to sell it and what objections you're going to hear and kind of that side of it. So, so first of all, there's two goals that you have when you're selling the merchant cash advances, okay? Two ways that you're going to make sales, okay? Number one, you want to play the numbers game. And let me explain what I mean by that. So, small business owners that you call, the vast majority of them do not currently need a cash advance, okay? So probably like anywhere from 90%, like 9 out of 10, maybe 19 out of 20, whatever. Most of the business owners you call, they don't currently need a cash advance, okay? And we'll talk about what to do with them in a second. But your goal is you're trying to find those people who do need a cash advance. And so it's really important for you to understand, don't get discouraged when you start calling and you're like, wow, I talked to 20 people and none of them were interested at all. Nobody showed any interest. That's normal, because a cash advance, you really have to play the numbers game. And I mean, this is one of those things where the harder you work and the more people you talk to, the more money you're going to make. And more sales you're going to make, because you're going to make a lot more sales if you're talking to a lot more people, because you have to talk to a lot of people. Otherwise, you're not going to find those people who need a cash advance. So the thing is, though, the good thing is about 1 out of 20 to 1 out of 40 business owners that you talk to, they do need a cash advance. And if you pitch it the right way to them, they are going to buy like every time. So the people who want a cash advance, they really do want it, and they want it right now. People who don't want a cash advance really don't want it, and they're probably not going to buy it no matter what you say to them right now. So it's one of those things where it's really split down the middle. It's not the kind of thing where people are like thinking about it and like, oh, I wonder if I should do that. When you call them, they know if they need money. And if they need money, they're going to be very interested in what you have to say. And if they don't need money, they're probably not going to be very interested in what you have to say, okay? So your number one goal is to play the numbers game and to get on the phone with as many business owners as you can and find those people that need the advance right now and they're interested in the merchant cash advance. You don't want to waste a huge amount of time with business owners that don't want it and that are not interested. You don't want it. This is not the kind of sales pitch where you're trying to like push and push and push so that eventually they'll say yes. That's the pitch that I like to use over the phone. Hi, my name is James Shepard with BBI. I work with several companies that provide short-term capital to small business owners and then you want to use their city name. Now, I'm going to pause for 1 second there and explain that. When you're calling over the phone, there are certain words that you can use that are going to grab the attention of the business owner. Now, when you're calling over the phone, you guys already know this because you've already been calling some, the biggest problem with calling business owners over the phone is really not the pitch. The biggest problem is you don't ever get to give your pitch, right? Because they just cut you off or they hang up on you or something. And that's probably, 60% of your calls. And you're trying to just get your foot in the door and, have that conversation. So if you want to do that, you need to use these words that are going to grab their attention. So for instance, I like to use their city name. That's a really good one to use. Use their city name and say, we provide small capital to small business owners in Altoona, Pennsylvania. And that's going to grab their attention like, oh, wait a second, that's my city. And they're going to start to, listen. So that's part of the data that you're going to get in the list is the city name. And so you can use that city name. Another one that I really like to use, if you can, is the business type. So ideally, I like to say we provide short-term capital to small business owners in Altoona, Pennsylvania, and we really like to specialize with pizza shops, if it's a pizza shop, or with retail stores if it's a retail store, or with hair salons if it's a hair salon, So using their business type and the city they're in right off the bat in the first 10 seconds, that's going to grab their attention and they're going to hear you out a little bit, okay?
Okay.
So once you get past that and you say, we like to provide short-term capital to small business owners in, your city, are you familiar with this type of financing option? Now, the reason I like to ask that question is because, and this is, again, you guys have to do some trial and error. As a general rule in a call center, if you ask for the manager or owner, usually they're going to hang up on you or they're not going to get the manager or the owner, right? So instead of doing that, I like to just start the pitch off like this and then ask them if they're familiar with this type of financing option. And what will usually happen in this case is they'll usually say, no, you probably need to talk to Bob, or whoever the owner is. And then they'll go get the owner, or they might say, he's not here right now, you'd have to call back tomorrow, and then of course you can schedule a call back. So this is going to tell you if you're on the phone with the owner. If they say, yeah, I'm familiar with that, then you can assume that you're talking to the decision maker, because really only the decision maker would understand what you're talking about here. So once they say yes, then you go down here and say, great, yeah, it's pretty simple. Basically, we provide you with capital in 3 business days. As long as you have steady deposits to your bank account or you process credit cards in your business, we can use either one of those as collateral. Now, the important thing about this little section here is you can use this really no matter what they say. So if you get the business owner on the phone and they say, no, I'm what kind of loan is it, or what kind of capital is it, or they say, yes, I've heard of that before, it doesn't matter. No matter what they say, just say, yeah, basically and then just explain it anyway. So whether or not they say they know what it is, just take a couple minutes, and it's just like 20 seconds there, and explain that to them of what it is. And I keep emphasizing that it's capital within 3 business days, because the kind of prospect you're looking for, if they're interested, it's because they really are short of money now. And if you get the paperwork from them and send it in, the money will hit their bank account in 3 business days. It's a very quick approval process, very quick, unless there's some kind of issue with them or something. Generally speaking, most of them that get approved, they get funded right away.
Okay.
All right, so now you've kind of explained what it is. Now, here's the line that I like to use here. So now I'm going to say, so I just talked to him about, you get your money in 3 business days. I know businesses are always in the market for more capital at the right rates in order to invest more in marketing and inventory, or even maybe just to stabilize some cash flow. What I'd like to do is I'd like to send you an email with more information about how much capital we could provide you in 3 business days or less. Would I have your permission to do this? So at this point, we're just trying to get like an initial yes from them, and we're trying to get that email address so that we can send them the introductory email that has more information. The whole idea behind that introductory email is to provide some legitimacy, so that if you're not able to sell them today, which we're going to try to do here in a minute, at least you got their email address, so we can kind of give it one more shot. We'll send them another email. Many times they'll click on it, and we can see that they are in fact interested, and then you could call them back. And if not, we'll email them consistently over time, and eventually they probably will need some money and they'll be interested.
Okay.
So if they say yes, you could send me an email. Here's my email address. What you have to understand is if they say yes right there, they are interested, okay? They probably do want a cash advance at that point, because you've told them enough that, again, the majority of people at that point are going to say no, that they're not interested. So the people who do say yes, they're interested, okay? So they've said yes now you know they're interested. Or if they say no, at that point, I'm just very honest with them and frank. And if they say like, no, I don't want you to email me, and just say, okay, are you looking for more capital for your business right now? And if they say no, then it's like, all right, thanks so much. Hope you have a great day today, and you're done. If they say, sometimes they weren't really listening, and so then when you just say, are you looking for more capital for your business? Every once in a while they'll say, well, yeah, I am. And then you can kind of go back into it and kind of re-explain it, because they probably just weren't listening to you.
Yeah. All right.
Okay, so now this next one here, this assumes that you're selling a merchant cash advance. Okay. So you say, thanks, I'll go ahead and get that email out to you right away. Let me ask you a couple of other quick questions so I can get you an estimated available capital. All right. You're going to say, first of all, do you know roughly how much credit card processing revenue do you have like on an average month right now? And sometimes they'll be a little hesitant to give you that information over the phone. And if they are, you just want to give them, re-engage with them and give them some options and say, like $10,000 a month, $20,000 a month, $30,000 a month. Give them some options to let them know you're not asking for the exact dollar amount. You just want like a general idea of, their average credit card processing volume. Okay. So you always want to start with the merchant cash advance first. Notice how I didn't even mention the ACH loan yet. I will in the next slide. So if we can get them a merchant cash advance, that's always going to be quicker and easier to get approved and get paid, to pay them. And so just do it this way if you can. So once they give you that number, so let's say they tell you, yeah, I process, $10,000 a month, just to make the math easy. I process $10,000 a month in credit card volume. All you got to do is, if you got a little calculator there, all you do is you take that amount, you multiply it by 0.8, and you multiply it by 1.2. And those are the two numbers. So if it's $10,000, 10,000 times 0.8 is $8,000. 10,000 times 1.2 is $12,000. So you could be pretty confident if they process $10,000 a month in credit card volume, you can be pretty confident that we could get them a merchant cash advance of between $8,000 and $12,000. Okay. If they're doing $20,000 a month, you take 20,000 times 0.8, and I believe that is $16,000.
16, yeah.
Right? If you take 20,000 times 1.2, that's $24,000. So you could say we could probably get you approved for $16,000 to $24,000. So That helps you figure out your range. So the only other question that you ask them is, have you been in business have you been in business there for at least 12 months? Okay. This is like the only other criteria that is required to get a cash advance approved. It is unlikely that you're going to get somebody approved for a cash advance if they've been in business less than 6 months. Okay. So if they say, no, we just started the business a couple months ago, just say, okay, great. Well, I'll go ahead and get that email out to you and, whatever. And then at that point, you're done. We'll send the email out to them. And if they're interested enough to fill out the application, then we'll try to get it approved. But the odds of getting that deal approved are slim to none, okay? Because the whole idea of the loan is based on their history of, revenue. And so if they don't have a history of revenue, it's going to be virtually impossible to get it approved. If they say yes, which most of them will, yeah, we've been in business for 12 months, we've been in business for 2 years, 3 years, whatever, then you go ahead and move on from there. Now, one other thing though, I got to put another slide in here because what if they say, well, I don't process any credit cards? Or they say, well, I only process, a couple $1,000s a month in credit cards. So if they process less than like $5,000 a month in credit card volume, then you're going to go to this slide. And you can skip that first part because you already said that. And then what you're going to ask him is, down here in the middle, you're going to say, okay, that's fine. What's your company's total revenue per month that gets deposited into your bank account? Give me a rough idea of that. And now they're going to tell you, well, our total revenue is whatever, okay? You can take that amount and multiply that by 0.5, just half of it, and that's probably how much we could get them approved for. So if they say, well, we do, we only do a few thousand a month in credit card volume, but we do $100,000 a month in total deposits to our bank account, you could probably get them approved for a $50,000 ACH loan. So take the amount times 0.5, that's how much you can get approved for. And again, same question. Have you been in business for at least 12 months? That's still going to apply. Just so you guys know, again, whether you want to put this into your pitch or not, it's totally up to you. You don't really have to. But just so you know, about the only other thing besides this that does kill one of these deals and make it not get approved is if they're behind on their lease or their rent or their mortgage. However they pay for their building. The only verification call that these merchant cash advance companies do, generally speaking, is they're going to call the landlord or the bank that has the mortgage and ask, are they up to date on their rent payments or are they up to date on their mortgage? So that's the only other one. You don't really have to do anything with that information, but just so you know, that's the only other thing that usually will kill a deal is if they're behind on that, because that's usually the idea behind that is if a company is behind on their rent, that's like the number one bill that they're going to pay. So if they're behind on their rent, they're probably doing really bad, and so then they're not going to give them a loan. So that does have an impact there. So that's really important. And again, I'm going to work with you guys to make sure you have these intro emails that have your phone number, your contact information, your email address, all that stuff. So that way they can keep it on file. And you would be surprised. You really would be surprised. It doesn't really do you any good for like 2 or 3 months. And that may seem like a long way away, but it's going to come. And 2 or 3 months from now, you would be surprised how many business owners, if we email them every week about this and say, special on ACH loans or whatever, you'd be surprised how many of them will email back. And those emails are going to go directly to you, whoever the agent is, going to go directly to you. You'd be surprised how many people will email back and say, all right, do you still have that, do you still offer capital? Because they need some money for something and they'll remember you and they'll see that email. So.